Hello and welcome. You're watching The Mining Show, brought to you by Blytheweigh, and I'm Charlie Gibson. Now, as I always say, sometimes when we're looking at mining companies, sometimes the clue is in the name, and it's a case in point in this particular instance. And I should also say that the company in question has seen its share price. If you invested at the beginning of the year, it would have been about 2.2p, and if you're still holding the shares today, they'd be about 2.8p. So that's a nice little bit of capital growth for you, about 25%, give or take, in Australian dollar terms, and that will probably give you a clue. The company in this particular instance is called Geopacific, and joining me all the way from Australia is Ron Heeks, the Managing Director. Ron, very good morning to you. Thank you very much indeed for joining us.
Good to be here.
So you have this project, Woodlark,
Gold
which is
project.
on the island of Woodlark,
Correct.
which is off the coast of Papua New Guinea.
Correct.
Now, why don't you tell us all about it?
It's a great project. We acquired the project in late 2016. It had had $150 million spent on it previously. It's got a multi-million ounce resource, and we've just come out with a PFS, which shows a 1.1 million ounce reserve and a 1.6 million ounce resource. Extremely good all-in sustaining costs of under 600 US for the first couple of years and sub 800 for life of mine. So very happy with the project, the way it's gone. It's in a great location. We don't have some of the challenges normally associated with PNG. We've got no topography at all. It's very flat. We only see benefits in being on an island. It makes for great logistics. We're very close to the coast. So it's a great place to work.
So there are islands which are big, like PNG, and there are islands which are small.
That's correct.
You're on a small island.
We are. The island's about 70 kilometres long and 20 odd kilometres wide. There's about 2,000 people live on the island and 6,000 in the wider group. So we've got the vast majority of our workforce who are walk-in, walk-out labour. That helps a lot. And the thing about island nations is that they're totally set up for island-based infrastructure. So getting things on and off is very easy. All the infrastructure is there to do that.
So, I mean, as you look at the island, from my perception anyway, it looked like a sort of classic bit of Robinson Crusoe.
Very much so. It was actually the first registered goldfield in PNG back in the 1880s. It was mined by an English company for a few years. Up until World War I, and not much has happened since then. A little bit of exploration by some of the majors, BHP and Barrick, but nothing really kicked on again until the 1990s and early 2000s when our predecessor moved onto the island, drilled 250,000 metres of drilling, built an exploration camp that's world class, and unfortunately got stuck in the 2012 downfall, and the project has been parked up for a while. Unfortunately for them. For us, it's all benefit. So it's a great project. It's got a massive upside potential. We think there's easily 5 million ounces in the greater goldfield, which in that part of the world still makes it very, very small.
So PNG, Papua New Guinea, what about the risks of because some companies, all right, on the mainland, but they've struggled a bit in that.
Yeah, certainly on the mainland. Look, the main challenges are topography and social issues. And you've got extreme topography in some areas. We don't have that. The island is essentially flat, so very, very easy to get around. Socially, we've got the friendliest people in PNG. All quite religious people. We have no police on the island. We have no security on the island. There's no fences. You'd quite happily let your kids run around and play there. So it's a very safe place to be.
In terms of prospectivity, if you were to look at a map, you can see gold to the north of you, gold to the south of you, and you've got this resource at the moment in the middle. Why do you think, because you have an exploration target of 5 million ounces,
Correct.
Is that right?
Yep.
Why do you think there's 5 million ounces there? Or is it just a case of you're dropping your cut-off grade?
No, I think it's easy to demonstrate that there's a lot more potential there. It's a typical epithermal goldfield for the region. You would expect 6 to 10 different areas of mineralisation there. We've really only got 2 at the moment. Very good sniffs that there's more around the area. A little bit of the goldfield is covered by a thin layer of limestone, and that's made exploration quite difficult for some people. Geochemistry, for instance, doesn't work, but with magnetics and other geophysical techniques, it's pretty easy to see what's going going on under those zones. So we're seeing a lot of repetition, and we would expect that structurally there will be more repetition, and we'll find mineralisation in between the areas that we've got now.
So you're chasing the 5 million ounces as an exploration target. You've done a pre-feasibility study.
Correct. We finished a pre-feasibility study earlier this year, which showed very, very robust economics, particularly a very low strip ratio, 2.5 to 1, so that drives very, very good costs and de-risks the project quite a bit. We like those numbers so much that we rolled straight into a definitive feasibility program. That'll be finished in August this year. We're expecting that to firm up the PFS numbers and enhance those a little bit. So it'll be a very robust project, and one of the few to be around to come on next year. There's not too much coming on.
So what happens if your DFS comes out and says this is all feasible and these are the economics on your 1 and a bit million ounce reserve, at the same time your geologists stick up their hand and say, actually we found 5 million ounces. Then suddenly your 100-ish thousand ounce a year operation is going to look relatively small.
I think you're 100% right. For the size of the company we are at the moment, there's only so much you can bite off at any one bite. The economics for this project would suggest about $135 million build. So for us, that's about the right size. So we've got a scale production profile, so we can see that expanding in the future is a very easy thing to do. So for us, it's about getting into production, getting a good cash flow going, and using that to grow the project.
So you have what's the NPV of the project?
NPV is about 200 million.
And is that pre-tax, post-tax?
That's post-tax.
That's post-tax 200 million.
Yeah.
Your market cap is about 50 odd million?
We're about 60 at the moment.
60 million. Are we talking,
US.
are we all
US.
We're all US here,
Yeah,
are we?
yep.
So you're trading at about 25% of NPV?
Yes.
Give or take?
Yep.
Which is what? How do you perceive that in terms of your valuation? Are you happy with that, or?
I wouldn't be the first managing director in here to say that he's a bit undervalued. I think we are in comparison to our peers. And one of the reasons for that is that because of the previous work that had been done, we were, after a year's work, able to come out with a resource, a reserve and a pre-feasibility study on the one day. So nobody saw the project evolving. You didn't have a resource come out and then 12 months later a reserve come out and then economics come out. It all came out at once. So it caught people unawares. The aim of what we're doing now is really to spread the word. And most people don't know who we are. They haven't been looking at explorers, but they have been looking at producers, and we've just popped up as a new term production profile, and people are seeing it for the first time.
So that's your valuation, if you like. What's the IRR? Give us a pre-tax IRR.
The IRR is pre-tax is 38%, post-tax 33%. So
at a gold price of? At
a gold price, we've actually run this in Aussie dollars because we will sell into the Aussie market, and most of our costs are Aussie.
Does Woodlark operate in Aussie dollars?
Essentially,
right.
yeah, essentially. So we've run it at 1650 Oz. We're using 75% conversion ratio there, so it's about 1230 US.
Okay. Now, what about tax?
Tax 25%. There's a 2.25% government royalty. 0.25 of that goes to the government, but the remaining 2% is actually shared out amongst the local community. So the government is very proactive in feeding back into the local community.
And am I right in thinking there's quite a large tax shield that you benefit from?
Yes, we go into this with a $100 million tax shield for money that's been spent.
Because of the historic spend, is
because
it?
Exactly.
Because of the 150 you spent that wasn't yours.
That wasn't ours, so that's a win. It's free money. That's at project level, so all of that is accessible.
And then the next step is, are you raising funds to develop the project? Or you need the definitive feasibility study out in August.
Correct.
And you need your geologist.
We've just put a little bit in the bank 8 weeks ago. We had a 10 million Oz raise. We had a very strong mandate from our current shareholders and a few new shareholders that wanted to come in to gear exploration back up again. We cranked exploration back while we're doing the DFS. But they were very keen to keep that going, and although we were funded for the DFS, we weren't funded to run a multi-rig drill program. So we raised a bit more money and we're back out in the field. We've got one rig drilling at the moment and another one on the way to site to keep exploration going. And this is the first time we've really looked at the big picture. Most of the work that we've done to date, and we drilled 30,000 metres during 2017, but that was all around the current resource areas to make them a lot more robust. This is the first time that we're scoping out the big field. And the first couple of holes have been drilled. We don't have the results yet, but they're looking pretty good.
The capex on the project, as it stands at the moment, according to the pre-feasibility, am I right in thinking 180 Aussie?
About 180 Aussie, yeah.
Okay, so normally I would suggest that would be 90 debt, 90 equity. Is that the way you're thinking?
It's probably going to be something like 60-40 debt-equity ratio. Yeah, we're going to try and keep it as vanilla as possible. We've got a very, very strong register. We're very blessed with a strong register with some of the biggest names in the industry on it. So we've got a lot of hitting power there for the equity side. The 60-40 seems to be about right, but you know, we've just appointed debt advisors to assist us with this process, and we'll firm that up as we go forward.
Ron, sometimes in these situations, something that catches companies unaware, perhaps I should say investors more unaware, is the permitting situation. What is the permitting situation?
Well, certainly the project is fully permitted at the moment. It's one of the great strengths of the work that was done previously. It allows us to build immediately that the finance is completed. So that's a great strength of the project, and at the minute that the DFS is complete, we could actually start building if the finance is there.
That still leaves you needing, by my calculation, about 72 million in equity.
Correct.
Which is a little bit more, which is about as quarter as big as the company is at the moment.
Yes, look, there's no doubt it's going to be a challenge, but I suppose I go back to the register that we've got. We do have some of the biggest names out there on the register. Franklin Templeton, Resource Capital Finance, Tembo Capital from the UK. You know, they're there to help us build the project, and that's what they do. So it's been a tough time in the exploration industry over the last few years. We've had fantastic support from those guys. They've allowed us to come up with a project now when very few have, and that's because we've been spending money over the last couple of years when most people haven't been doing anything at all.
And in terms of timing, what are your thoughts on timing?
We would very much like to get this project financed this year, and that would give us a gold pour for late 2019, early 2020.
You can do the construction that quickly?
Yes, 12 months time frame. You know, the biggest issue at the moment is Sag Mills. There's a bit of a delay there, but you know, we would see this as largely an offshore build, and we can bring in big sections because we can bring in barges. We're only 4K from the coast, so it can be largely built offshore and plug and play on the island. So
does a large enough port to handle all of this?
We will be putting in a wharf facility, but all the infrastructure there is to do that. There's barges in that part of the world. Most things are moved around on barges and landing craft in that part of the world. So it's pretty simple stuff, and it's easy to move around.
All right, Ron, thank you very much indeed, and we wish you the very best of luck.
Thank you very much.
Not at all. Right, ladies and gentlemen, I'm afraid that's all we got time for this week. That was Ron Heeks, the Managing Director of Geopacific, and as I say, the clue is in the name. Not the name of their project, which is Woodlark, but it is in the name of their company, which I'll repeat again for you, is Geopacific. And as I say, shares up. If you bought them beginning of the year at about 2.2 Australian cents, and now trading at about 2.8. And there you hear how they're looking to take the project forward over the course of the next few months and years. As I say, that's all we got time for today from me, Charlie Gibson, bringing you the mining show on Core Finance, brought to you by Blytheweigh, and we'll look forward to seeing you next week with more such opportunities, and until then, you have a very capital day.